Big losses in the stock market have rattled investors, and with central banks around the world determined to tighten the monetary taps in an attempt to fight stubbornly high inflation, worries are growing that this will tip economies into recession. So, what do you do with your money? Well, my guest for this show believes that while we're on the verge of a bear market, there are still some good investment opportunities. Sebastien Mc Mahon is Chief Strategist at IA Financial Group, and he joins me now from Quebec City. Sebastien, great to have you on Strictly Money.
Great to be here, Saijal.
So I think it's fair to say there's a lot of economic uncertainty, and markets certainly don't like uncertainty. Do you think that the reaction that we are seeing is in line with the data and what the data is telling us?
Sure, and it's a fascinating time for macro and for the markets right now. And the second leg of the sell-off that we're starting to see here seems to have a lot to do with the real economic impact of inflation. So, for example, we had Target and Walmart coming out in their earnings calls mentioning that the demand for discretionary items is starting to be hurt, that it's costing them a lot more money to operate. So inflation is biting into their profits. So it's a difficult time. The economy is in a tougher place in 2022 than it was in 2021, and it's starting to be reflected here in the markets.
I know when you see, staples like that struggling with inflationary pressures, I mean, you wonder why, you understand why we've seen the sell-offs that we have seen. Sebastian, do you think a recession, though, is inevitable? And the second part is, we talk a lot about stagflation. Is that likely what we're going to see?
Well, I don't know if it's inevitable that we have a recession, but I think it's very likely that we have one, especially in the US. I think Canada is in a much better place, so maybe we could avoid it. But maybe just to frame this into space and time. So 2020, we had a pandemic and we had to shut the economy down. And if the governments and the central banks did not inject all of this money into the system, we would have likely had an economic depression. And believe me, this would have hurt much more than the 6.8% inflation that we have in Canada right now. So in 2020, a lot of money injected. 2021, we think that the patient was saved, the economy was alive again. And now in 2022, we're feeling the after effects or the hangover of the measures that we put in place following the pandemic. So we have maybe a chart that we could bring on the screen here, which is an indicator that we've been using for a good while. It's the monetary policy cycle. You know that in the world, there are many central banks like the Bank of Canada, the Fed in the US, the European central banks, and they all have they all have decisions of their own. So we built an index, which is the red line here on your screen, and that's the amount of central banks, the number of central banks for which the last move was a rate cut. So that moves the line down, and the line up rather, and the rate hike. Last time the last move was a rate hike, moves the line down. So the more central banks are hiking and hiking and hiking, the more the line will go down. And as you can see in the chart, it strongly correlates and even has a leading impact on the global economic cycle, which here is shown by what we call the global PMI, which is pretty much the global economic cycle. So early in 2022 and even late in 2021, we were already expecting a moderation of economic growth around the world, and we are seeing that it's coming out pretty much like clockwork. Now, the risks of a technical recession, meaning that we have at least 2 consecutive quarters of negative growth. In the US, that's very likely. In the Eurozone, that's pretty sure. Well, it's getting pretty high. Probably it won't be the kind of recession where we have booming unemployment because the labor market remains pretty tight. But I think it's very, very likely that we get there.
Okay. Sebastian, let's go back to inflation, right? Because it's front and center. It's the biggest economic headwind it seems like we're having, and it's still persistently high on both sides of the border. How do you think this plays out? And when can we expect to see relief? We have about 40 seconds to the break.
Yeah, sure. So that's a tough question. And since we have now inflation that's led by food prices and by gasoline prices, this is mostly coming from the Ukraine and Russia situation now more than we had before with the supply chain issues. Central banks can't really do anything about that. So we're going to have some sustained inflation on food and on gasoline over the next few months and quarters. After that, let's see. But I think it's a return to 2% inflation. Maybe that's more a story now of late 2023 rather than late 2022.
Okay, we're going to take a quick break. Stay with us because a lot more to unpack here. We'll be right back.